Welcome back for another day in the markets where tech is doing everything but go down. There is so much going on. I don't even want to talk about it until we get into the show and play the intro. So let's just start it. Welcome back to Money Never Sleeps. Welcome back to Money Never Sleeps. You know who we are. I'm joined today by Mr. House. Always glad to have you, man. Before we get into anything else, nothing we say is financial advice. We are just a couple of guys that love talking about the markets, love talking about the mania in the markets, and just going over some of the stuff that's happening from day to day in global macroeconomic news. So before you do anything, financial-wise, consult with your financial advisor, do some research. We're not responsible for any of that shit. So before we get into it, I just want to run down our show today because we have a lot on the agenda. We got tech stock rallies, the earnings, layoffs. We also got China and their plan to revitalize the market economy. We're going to do some crypto TA funding rates, news, anything out of the crypto sector. We're also going to talk a little bit about zombie firms, which ties in with what's happening in some of the banks. So we got a pretty packed episode here today. House, is there anywhere you would like to start today? Floor is all yours. We can just jump into any of those categories.
Honestly, I think the zombie firms is probably one of the more interesting things because I feel like it's one of those things that not a lot of people have heard of or really paid attention to at all if they have. And even then, it's probably back in the mind at this point in the year. Or
Absolutely.
not necessarily beginning of the year, but at this point with where the economy's at.
Exactly. And I think with earnings too, we're going to start seeing which of these zombie firms, after years of just not producing any profits, they're not profitable whatsoever. However, they're still able to find those lines of credit that just keep them operating. We've been talking about how bank lending standards have tightened significantly. We also know that corporate lending standards are starting to go down as well. People aren't necessarily willing to risk lending out to people because, once again, we're in a collateral and dollar shortage right now in the global economy. We're not recognizing it. We're not paying attention to it just yet, but it'll come. I promise you guys. But the zombie firms thing really is interesting because in the past few days, we've seen some companies just pretty much say, we're calling it quits, guys. Things aren't as great as we would like them to be, but we just have to either file for bankruptcy or we have to shut down our entire e-commerce division. I think the big one that we've all heard over the past few days was a company that I don't necessarily know, however, was profitable, but Vroom. This is their announcement that's on their website. You can see that they're shutting down their entire e-commerce operation, and they're also looking to offload some of their used cars. I mean, at this point, it's kind of funny when you see something like this come out because it's almost any of those car companies like them, Carvana, were they ever going to be profitable? Were they just here for the rally in 2021 and people just got super excited and bought into them? I think it's more of the latter. I'm going to pull up the Vroom chart because it kind of just shows you what these zombie firms are all about. They are pretty much just bleeders of capital. If my internet could pull up, 1 second, Xfinity. I don't have you anymore, but still very slow right now. I mean, this is the entire chart of Vroom and its history. Let me just pull back even further because we can see that. Hold on, not done yet, guys. You can see that back in 2020, all-time high, $75 a share, currently trading at 26 cents a share. Now, from this time to this time, all it did was bleed, right? There is no actual market, I think, for this product whatsoever. I don't think the company ever did well. I think their earnings were just pretty much losing money quarter after quarter. The interesting thing was they were always able to find lines of credit that kept them operating. Now we're seeing with all the rates being, current rates being at 5.31, I think that's the Federal Reserve actual rate right now, but 5.25 to 5.5. With that and how much banks are just afraid of deposit flight, and they're also stricter on their lending standards, it's really hard to come across debt. No one's willing to issue debt right now, and if they are, it's most likely going to be from government bills, treasury, stuff like that. Corporations are not doing it, and the banks are definitely a lot more scared to be lending out to some of these firms. And because of that, That's what causes some of these to go out of business. I bring Vroom up because that's the big one that's happened recently. But even as of today, I believe there was a backed company from Mark Cuban that filed for bankruptcy as well early this afternoon. I'll have to find that in a second. But it just shows you that, okay, capital is starting to disappear where you're not going to be able to borrow it as easily. And if you are, it's just going to be absolutely, astronomical how much you're going to have to pay back, or you're going to have to put up some huge amount of collateral in order to pretty much operate at that point. But we also know that there's a collateral shortage right now. Here it is. I pulled it up on Twitter. It's Mark Cuban's company. It's called RoboTires, or RoboTire, files for Chapter 7 bankruptcy liquidation. I think we got to get away from some of these vehicle companies and, bull market heights, because it's absolutely a joke how many of these are just being not liquidated, but they're pretty much just not performing well whatsoever. I mean, Carvana still isn't a profitable company. However, there's so much short interest that the price has gone up. But it just seems like a lot of these are around, these fads that popped up in 2020, 2021. And now we're starting to bleed. And now I think banks and people with smart money that are issuing debt are just saying, you know what? It's a risk that we're not willing to take anymore. Let's cut our losses. We wish you guys the best of luck.
Well, and I feel like part of it too is right. We got hit with the COVID bubble, and this is also just looking at these two companies in specific. So RoboTire was essentially like an AI automation to replace tires faster than humans could, right? Vroom being the car dealership that comes to you, right? Like those are things that got a lot of funding in a pandemic because money was being printed. Um, it seemed like we were never getting out of our houses, right? So like those were things that made sense then. But when you have like an open world where there's actual debt that needs to be paid, it's like we can't just go to utopia, right? It's like that stuff happens over time. But no, yeah, I think it's a product of both like the SPAC, just fiasco of the 2020, and then as well as the COVID pandemic, right? You had a lot of companies that were in like weird situations where there was a small window of time to make a lot of money for investors, founders, etc. So yeah, I think it's probably just an aftermath of that. Like if it worked out, cool. It can be that 100x that the VC or portco is looking for, or portfolio managers looking for out of their portco. But if not, it's like okay, time to wind down, cut our losses, and move on to the next round. Better opportunities. AI has progressed a lot, so especially when you're looking at automation and stuff like that.
Yeah, absolutely. And the interesting thing here is obviously these companies are not going to be in existence, most likely, if they're not able to find capital in order to run the operation, right? Especially if they're bleeding out money, they have no money coming in, and even in the form of debt, it's not going to work out. The interesting thing here is when we look at that, it kind of shows you the bubble of 2020, 2021. And I mean, that is in how much money actually was in the system and how excited people were to, dispense a lot of that capital. You could see that from here. I mean, $75 for a company that, again, now is trading at 26 cents. We could see how quick and how hard the fall from grace really was once people realized, we don't need this anymore. I think that now, and again, 2020, 2021, very different situation in terms of how much money was actually circulating in the economy, how much consumers had discretionary spending, way more than they currently have right now. So anything that's kind of being held up in the market right now, I think, I'm not saying is going to go under like some of these zombie firms, but I do think that when you see these fall from graces that are happening from these smaller companies that can't find capital, wait till some of these other companies that are some of the top ones just aren't profitable. And when we look year over year, and then even their outlook seems to be a bit more dim. It could be this quarter, it could be next quarter. We don't know. We're going to find out a little bit today with some of the Tesla earnings. But I don't think that this is over one bit. And I think this is kind of foreshadowing what's going to be happening for a lot of companies, especially smaller ones. And even for the big ones, I think that these charts and price action and people just panicking because they need cash. And this could be a symptom of what causes a lot of these other ones to be sold off, because people do need cash to pay off some of these debts. It's going to be really interesting to see where that play, how these zombie firms really affect the greater market, because I think right now there's extreme over speculation and hope that the market's going to keep going up. But these are the type of things that you need to be listening to, ear to the grounds, that maybe this isn't as strong of a market as we really expect. And if we can talk about even some of the indexes hitting all-time highs, let's do that right now, because S&P is, well, it's pulled back a little bit, but it looks like it was at 49, a little bit north of 49K, 4,900, I should say, this morning. And where are we? There we are. Pull this up. Oops, does not want to go there. All right, I got to pull it in a different window. 1 second, guys. I am pulling this up right here. Here we are. We're at 48.80, 48.80 right now. You can see how much the S&P has been gapping up like crazy. We got about 50 minutes, 58 minutes left in the trading day. I'm going to remove this just so we can take a look at how this has progressed. I mean, we're at all-time highs. There's no question about it. I don't know if this wave count is even accurate at this point, if this is 5 waves up here. I think that 100% that we are due for a massive correction. I can just look at the stochastic RSI in the short period of time that this was oversold, back in Friday, the 5th of January. You can see how fast in this week, especially with how little the price is actually pushed up, even though we're at all-time highs, it's got to overbought. Now, I bring this up in, relation to the zombie firms because majority of this weighted is tech stocks, right? We can just go through the tech stocks right now and see how some of them are doing. I mean, Nvidia today, once again, for like the third day straight, hitting all-time highs. We're at 618. It shot all the way up to 628. You can see Microsoft's having a great day. It's above $403 right now. You can see Meta's actually doing really well today too, up about $6.7. Google, like these are all doing extremely well. But when we look at the major indexes, the S&P and also the Nasdaq, these are heavily weighted with a lot of those stocks, right? I think more so now than even in years prior. So when we see this, all-time highs, amazing. We're definitely not in the same place we were back in 2021. We're higher. Then we have to look at what's happening in the Russell, the smaller caps. We're pretty much at the same place we were if we look back in December of 2020, same place that we were in March of 2022. We haven't really gone anywhere with, we've been trading sideways in this range. And we have to, question ourselves, how many of these companies within the Russell are profitable? And if they're not, and we get some of these earnings and some of them are actually zombie firms that are just operating in the skies, well, maybe maybe the economy isn't as strong as it is, but we're just still seeing all-time highs because of how much the tech stocks weight in the actual indexes. And that could be the greatest illusion to, I think, a lot of markets, not necessarily, I guess, looking at the top 7, looking at the top indexes. But then if you look at, the macro of how some of these smaller caps are doing, things that should be, rallying with tech, rallying with the rest of the market if we really were in a bull market, it's like we're pretty much flat. If anything, we're down from the all-time high. So it really is a question that we're going to have to see as earnings roll out, because again, we're still very early in the earnings season. Tech's heavily weighted at the back half of the earnings season, but we are going to start getting retailers and a lot of these other corporations that are in the Russell fairly soon. But that's why, we're seeing all-time highs and everything for the S&P, the Nasdaq, the Dow. But for the Russell, this continuing trading sideways, I think that tells the true story of where the market and the economy really is. Let's see what else we got here. Let's talk about Truist, because we used to talk about them a lot and we haven't said anything. But Truist and KeyBank, two interesting things that came out of there recently. Let's see, you got KeyBank, and then I'm sure you have plenty to say on what's going on in China, as do I, because it is an absolute interesting event, turn of events that's happening over there, but we'll get into it in a second. Truist Financial, let's start with there. You can see that Truist is to close 4% of its branches by March. This came out at the beginning of the year, January 5th, so it's a few weeks old. However, the fact that they had lost, I believe, close to $1 billion in the fourth quarter, and now they're closing a bunch of branches, tells me that, okay, 4% of what they currently have, I believe, is about 80 or so branches, and they announced that they were going to close another 6 or so, I think, last night. So it's about 86 branches that they're closing. It's across the states that they operate in DC. The thing with Truist is the problem, and I think this is the problem with a lot of people in their perception of the banking crisis. Everyone thinks it's the regional banks that are 100% screwed. They're not wrong. However, they are wrong about the fact that the big banks are the ones that are just equally as screwed. However, it's for a different set of reasons, right? We know that if we look back at the top banks, look at Silicon Valley, First Republic, Credit Suisse, Signature Bank, those are all massive oil banks. Those are banks that had a huge amount of their accounts totaling over 250K. There were also a ton of banks that had pretty much loans operating as, whether it's Federal Home Loan banks or just other corporate loans or anything like that, operating as percentage of equity, it was a large percent. It was over, I believe, 75% for most of those banks. Now, Truist is by no means, it's not a regional bank, but at the same time, it's pretty big for the amount of people that have money in Truist. It's really something that people aren't paying attention to. And if we looked at that spreadsheet that we always pulled up, top three banks were Truist, KeyBank, and then Charles Schwab. But Truist right here, I think a lot of people also don't understand, is before the pandemic, they're the sum of two banks that merged together right before in 2019, right before 2019, right before 2020. So we know that they had issues back then, and now it's continuing to pile on here. So we're seeing this. That's really important, I think, because a lot of people are saying that it's the regional banks that are going to be the problem. I disagree. I think it's going to be the bigger banks just as much. If we go to KeyBank now, who also is having some issues. We see right here, they reported about 1,000 job losses and annual net income drops to about $1 billion. So very similar situation to Truist. Layoffs. They're trying to cut costs. They're trying to operate and keep their heads afloat. But again, KeyBank was another one. It was Schwab, KeyBank, and Truist in that order that were the next ones after Silicon Valley, First Republic, and Signature. So this is something that we're going to have to keep an eye on, and it goes again in line with banks tightening standards being extremely, extremely tight. And this is probably going to be the reason why it's going to be harder for people to, both borrow, but at the same time, a lot of these corporations, maybe some of these zombie companies, it's going to be hard for them to borrow as well. So this is not a good sign. We still have a few months until March. I think March is going to be the telltale sign of which banks are really screwed and which ones aren't. But, it's just something that we're going to keep an eye on as we march on to March. So other than that bad pun that I just put right there, I think it's time that we dive into Asia. What do you think?
Yeah, let's go for it.
All right. Have you been keeping up with any of the Asia stuff that happened in the past 24 hours?
Are you referring to the giant green rocket in the chart when China announced their economic stimulus package? Because if so, I think we're on the same page.
Absolutely. Yeah. I mean, let's put it this way. Base level, what happens, because there's a lot of jargon, a lot of people that are saying things, they're pretty much just injecting liquidity, right? It's $280 billion. I believe it's like a trillion yen or something like that they're injecting into the system. But the methods in which they are also taking with these injections is really interesting too, right? Their reserve ratio, they're dropping so that you don't necessarily need to have as much in reserves for these banks. And pretty much the liquidity that's coming in from that is going to go into the equity market, and they're just going to hold these stocks and just hope that everything works out from there, right? That it's going to bolster the economy, that's going to bolster the market, and people are going to start seeing, or hopefully money's going to start leaving, going offshore and just coming back onshore for the market to start picking up again. I think that's their hope that this is going to work out. However, we talked about yesterday, it was like over 800 billion or so that they had injected over the past 6 months, and we're still down like 30% or something like that from those injections in, June, July, whenever they were. This is really interesting too. They are also banning short selling. So now people cannot profit from borrowing off shares of the company and then and then pretty much just saying like, yeah, we're going to bet that the market goes down. Now, I don't necessarily buy that short selling is what causes the markets to go down. I think it's spot selling, and it's also spot covering for when people do decide to sell. And again, it always comes back to debt. People are like, well, we need cash, so let's sell some of these liquid assets and get liquid. I think that's the thing, but short selling is just kind of something that just never works. It didn't work in the U.S. back in 2008 when they banned it in September. It's not working necessarily right now in Korea, and this is another country that's doing it right now at a pretty pivotal point. I think they're just defending that historical line. Now, I have my opinions on whether if this is going to work or not. I think I've been very telling about that. The question is, how do you think this is going to impact China, and how do you think this is going to impact the rest of the Asian markets, and will this bleed into the U.S. markets at some point?
I mean, loaded question,
I know.
but I
I put you on
mean,
the spot.
no, yeah, exactly. But I think China, it's probably going to see, I would hope, something similar to what the U.S. saw, kind of with the pandemic when we got our stimulus, right? Like we're probably going to see a lot of discretionary spending that otherwise wouldn't occur, with the caveat that there already has been some skepticism amongst the Chinese people because of all of the, how long COVID has persisted there, and how many just shutdowns of factories there were. Now, granted, it's hard to really have a solid, truthful take on that being an outsider's perspective, because we only see what we see on, social and legacy media. which doesn't tell the whole story. But no, I think, as the charts show, and as I think most people would have anticipated, you're going to see a big pump up in numbers because it shows like, hey, we've at least got time before we have to panic, right? And when there's time before you can panic and like, okay, we've got 6 months until meltdown. Let's at least spend the first three having a good time. Like that's probably a lot of the attitude is, you probably saw people who are like, there's no way we even get this, Evergrande bankrupt, other one bankrupt, can't think of his name. Everything's going to shit, right? So something like this, it's like you're probably doing some still risk management because obviously poor risk management is what got people into the situation. But you're also trying to figure out, how do we leverage this to get ahead of everyone else, right? Is that investing in the economy because people might not? People are going to be saving, right? Like, I don't know. I think there's a bunch of different ways that it plays out, but I think probably you'll see a mixture of people who want to keep the money in China, invest, and take the gamble that this plays out well long run. And then you'll also have probably along the wealthier side of people, some people are like, that's great. I might invest in more, but I'm also still trying to get money out of China at the same time for whatever reason for, financial sovereignty. So I'm going to go buy, a bunch of bait, bunch of Gucci and send it to Italy, Europe, or America and sell it there and convert it to fiat USD. Right. So I think there are a lot of different ways that it could play out and impact the global economy versus just China itself.
Yeah, I completely agree. The thing for me when I see the stimulus pretty much, and the other thing too is that they're not allowing them to buy any U.S. ETFs or tech ETFs for the United States, right? It's I think the Nasdaq and the SPY they're not letting them buy it for pretty much domestic investors, anyone that's not an insider in the financial world over there. But the interesting thing that I think people are forgetting about when it comes to China is how much their exports have dropped recently. And will things ever turn around if their exports don't start picking up, right? That's going to be really important because that's their bread and butter. That's pretty much what China is. They're the world's leading exporter, but right now they're not. We've seen those decline significantly, and a lot of that comes with demand. And I think the demand, not necessarily just domestic in their case, but global demand is just dropping like crazy. And you wouldn't be able to tell if you looked at the stock prices of things in the indexes in some of these countries. You look at Germany, their manufacturing is in complete contraction. It's almost depression levels, but the DAX is near all-time highs at this point. The other thing is too, talking about indexes, it's where is a lot of this offshore money going in Asia? I think a lot of this is going towards Japan. Because if we're lining this up, what's happening with the Hang Seng and the Nikkei, it's a different story, and the countries are not that far off from each other, pretty close in proximity. And next thing you know, it's like, okay, how is one market doing the exact opposite of the other? One's having extreme problems, the other one's having inflation problems, right? Deflation versus inflation, and a lot of money that feels like, okay, let's just get it out of China so we're not just riding this all the way down. I think a lot of them are just piling into the Nikkei in Japan. They're just like, you know what? This seems safe right now. It seems like we're doing pretty good. Japan just wants to be, it seems like there's a lot of it's easier to pretty much make money in Japan, especially with how much they print. So let's just keep it in those equities there for a little bit and see what happens. That's the one thing that I'm seeing with what's happening in China. And I don't necessarily think that there's any incentive, even with the stimulus package right now, to bring some of that money back. So it's going to be really interesting how this plays out. I'm going to watch it like a hawk this entire week. I don't necessarily think anything happens until next week. Evergrande's going to be interesting to see if they prolong that or if they just say, maybe we can liquidate some of these assets. Maybe debt restructuring is over with, but I can't really be certain at that point. I just don't think that everyone here who's trying to catch the bottom on the Hang Seng knows what they're talking about, because they're thinking that this is like 2008 for them. Well, no, 2008 would be the entire Chinese economy collapse. The world's second largest global economy is just in absolute ruins. It's faltering right now, and I don't think that anyone in China questions that one bit. The question is, when it does go, is this the bottom, or do we have roughly another 30% or so to see if we can get a double bottom of the great financial crisis back in 2008. It's going to be really interesting to see with China. I think that's the important market to be watching right now and seeing how that impacts Forex. But no, I think that's good enough where we can stop with China and Asia. Before we get into crypto, because I want to spend some good time on crypto, I just want to run through Netflix real quick and the earnings because fuck. What can you say about Netflix? The subscribers are, this revenue surge, it's cracking down on password sharing, which I think we kind of knew, right? But when you look at this, and this from the Wall Street Journal, and they had a great day yesterday too with the WWE signing. I think what this is they're making money by making it harder to be a Netflix subscriber. We talked about this yesterday on the show. I said I wouldn't be surprised if they got rid of their basic streaming package where it's like I don't know what it's $11.99 and like ads or something like that. Yeah, that's gone. That's completely gone. And people are saying this is bullish, and it's like, okay, well, here's the thing too. Netflix is probably the streaming service of last resort. If people are going to get rid of all the other ones, they're probably going to get rid of Discover. You disagree?
Oh, the way you said it at first, I was going to disagree, but where I think you're going with it, I think I'm going to agree.
I was just going to say they're going to get rid of like something like a Discovery, Shutter, AMC Plus, stuff like that they don't necessarily need. It's like, Netflix is good enough. They got some good shows on there. They got some movies. A Netflix account and a Tubi account. You don't need to worry about entertainment. There's plenty of entertainment out there. I think most people will realize that, hey, this might not be the bad way to go. But I do think there's a lot of streaming services that aren't necessarily as good that are probably going to see some negative price action. And the other thing too is Netflix has a ton of packages with providers, T-Mobile. I think there's a couple of other services where it's like, do you have a plan? You get pretty much free Netflix or whatever. So seeing their subscribers, they crack down on password sharing and everything like that. They're kind of forcing people to push their prices up, their revenue up. But eventually it's going to get to the point where it's like, how many more people can you add, right? I think a lot of people are looking to everyone. Yeah, that's true. Convert everybody.
All 8 billion.
Just start going through the Rolodex of people who have deceased, and it's like, oh yeah, you have a Netflix subscription. I wouldn't be surprised if you see something like that. I'm just kidding, but yeah, don't get me wrong. I'm not shitting on Netflix one bit, but I do think that for what is happening and how they have to make their money, it's again telling of the current market. It's kind of inflationary, if you ask me. It's causing more stress on the consumer, and eventually it's just like, how much more could you push up after such a revenue beat? So just my thoughts on that, and then why it's up 13% today.
Yeah, no, I think that makes sense. And no, I agree with you. I thought when you said Netflix was the place of last resort, I thought you meant that it had become like the worst streaming service. But no, I agree. I think like there was a period where other streaming services seemed like they were catching up. But Netflix doubled down on their original content. That seems to have gone really well. I think they're bringing back a lot of, other production. I don't know if the right word's third party like media. I don't know in that context if it's correct, but they're bringing in other big ticket movies and shows, which they had lost for a point. So yeah, I would agree with that. Like we got rid of Hulu recently. I think we still have HBO, and I'll only call it HBO. Like, why? I don't know why they did that whole rebrand. It wasn't going to make themselves better than Netflix. Honestly, I think having the HBO brand recognition is the one thing that kind of made them stand next to Netflix. And now it's just Max. It's like, what's Max, right? Like it doesn't. It's kind of like when Facebook went to Meta. I'm only going to call it Facebook. I'll acknowledge the ticker, but I'm only going to call it Facebook. But yeah, that's all I have on that.
Yeah, I agree with you on the HBO thing too. Like that's probably the other big, because that's Warner Brothers IP. Everything. It's a massive library of history that they have there and tons of shows. But I remember when it was the good old days of HBO, when you had Monday night documentaries and was it Saturday night boxing and stuff like that. And then you had Cinemax, which was the one which it's the merger between the two. But yeah, it's getting to a point where the plans are getting too expensive. People are going to definitely have to start picking and choosing which ones they are. Question is, are the ones that they pick publicly traded or not? I think Netflix is the one that, I'm going to pull up the Netflix chart real quick just because it's so stupid. How people are, losing their minds over Netflix right now. And it's fine. I get it, but it was an insane insane beat in terms of revenue. But if we look at Netflix on the grand scheme of things, let me just get out of this stupid. I had so many Elliott wave theory things going on here, but again, I still think it's an ABC pattern. But just think about it. Netflix was at like $700 a share. It's currently at 546, and this is back when people had money. This is questionable over here. So I think that's yeah, it's still part of the structure. I mean, even if I'm looking at this right now, I could say, what is this? 1, 2, 3, 4, 5. Not a fun chart, but for the most part, yeah, I don't like this chart one bit. That doesn't make sense. Probably 5 waves here, 5 waves here, 3 on the down. Yeah, that makes more sense there. But it is what it is. I think that people are getting out too exuberant about it. But the thing that's really important to remember is when bad times do hit, let's just take a look at what happened to Netflix. Straight down, right? So from $700, it went all the way down to roughly what is that? $165 a share. I mean, and let's look at this in terms of months, how long it took to get there. It was 1, 2, 3, 4, 5, 6 bad months, and then Netflix was down 76%. So these things happen fast. Just keep an eye on that, because if we are at a point where we're at max euphoria, anything can happen, guys. So that's enough on Netflix. Let's get into the last thing, the most important thing, what everyone's here for: Bitcoin, crypto. Where do you want to start in the crypto sector?
I think ETH and Bitcoin are looking pretty similar, but ETH's looking a little bit choppier. So maybe we start with ETH, and then I think maybe Sol would be a fun one too.
Oh, definitely. Yeah, let's do it. Yeah, pulling up ETH. This is on the monthly. This means that. Oh, actually, you know what? That's a cute little monthly candle there. Look at that. Little inverted hammer. We like to see it. We like to see it. But yeah, I mean, it seems like we got a strong rejection from this level up here at 27, right? The interesting thing when I look at this, let's pull up the volume as well. Yeah, I mean, as you see the monthly volume, it was dropping while the price was pushing up. Eventually, this is going to break down from this. I think that's a given. I only pulled up the monthly because I had the monthly on Netflix real quick. But this is a really good thing to take a look at and see in perspective how much it's pulled back. And that, once again, comes with ETF. Imagine when we get the ETH ETF. I'm sure that'll be a green candle too. Just kidding. But yeah, this is how we are looking right now on the daily. It's looking pretty good on the move down. The question is this structure done with? I don't necessarily think so. So if I'm looking at this right, I got to go in the 4-hour maybe for this. Now this could be wave 1, wave 2. I think this could be a massive wave 3. We can get a little wave 4 bounce and then push it down another one. So on the 4-hourly, I'm thinking it's something like this. Wave 1, wave 2, wave 3, big. Wave 4, it's going to be less than wave 1. Maybe let's just say 24,264. I don't think it's going to be there. And then wave 5, it's going to come down probably below maybe this trend line here. So maybe we could be like sub 2100 for wave 5. But this is a pretty good, interesting chart here. And again, I think that the top is in for ETH. I don't necessarily think we're going to rally up higher, just given how it's trading very much like Bitcoin. I don't think Bitcoin's going to put in a new high either. I think I'm convinced that 49K might have been the top. So when I look at this here, if we got 5 waves down, obviously we're going to have a three-wave bounce, right? Something like this. But then we're probably putting in another 5 waves. And then you have to start the question, it's like, are these nested waves within a larger structure? And then we look back at a larger structure and it's like, potentially, we're looking at a 5-wave move to the downside, because this would be the last leg of this ABC corrective pattern. So when I look at ETH, maybe I'm doing a bad job of explaining the shorter time frame. I think that we are probably going to see a bit of a bounce, but I think the question is, can we put in a little bit of another low here and then maybe push up a little bit higher? I think the bounce is coming. I just don't necessarily know if this structure is completely finished yet on the shorter time frame, or if we are ready to start making our way up to the upside and in the small bounce. I don't necessarily think it's going to be massive. I mean, we could even find some resistance somewhere around here, which would be 24.12. And maybe even a little bit lower, we could find it maybe around 23.58. So 23.58 to maybe 24 if we get any type of squeeze. But that's what I'm seeing on the ETH 4-hourly chart and some of the shorter time frames. What do you any thoughts on ETH's price action right now? Do you think that's pretty much lining up with Bitcoin, or?
Yeah, I mean, I think your kind of technical analysis right there is spot on, and I think it matches with the fundamental too. Like, the way I'm seeing it is that, especially from the Bitcoin ETF narrative, outflows have been getting ridiculous. Grayscale Bitcoin Trust, that thing is just getting hammered. So yeah, I think, pairing that with this, and I think what brings the next big wave to ETH is I truly think whenever the spot ETH ETF starts coming up, right? I think it's going to be the exact same thing. We're going to see the whole, this time's going to be different, guys. This time is going to be different, right? But it's like, because every time it's like, everyone's like, no, there's no way. But what if, right? What if this time is different? Like, no one will say it, but they're all going to start pumping. And at that point, it's like, what happens, right? But I think that's the next great kind of price movement. If it's not that, it's probably the effects of the halving just trailing Bitcoin. But yeah, that's kind of where I'm at with it. Like, I think there's a lot of talk also going on around the layer twos. Like Arbitrum has grown absolutely massive compared to every other layer two. They're over 2 billion TVL now. I think it's like year 2.4, 2.7. But then even further than that, right, you've got like Celestia, which is a Cosmos chain that's a parallel to ETH-L1. And then you've got stuff like Mode Network, Metis, Blast L2, Frame XYZ, right? You've got so much competition and so much stuff looming and really building in the EVM ecosystem that I think, we could also see some sort of propellant come out of there. But that's also like, just a lot of hypotheticals and theoreticals, because not everything is out of testnet phasing or once it's gotten to mainnet. There's still a lot of complexity that needs to be sorted through. But yeah, that's all I've got for you.
Yeah, it's makes amazing points there. I completely agree with ETH, and the ETF thing annoys me, but I understand that you are right that something like that could definitely just be like, what if, maybe this is the start of the bull market, this is the alt rally, something like that could definitely be a narrative that could be.
That's what it is. The ETH ETF triggers the alt rally.
It's going to be
all the L2 tokens you've been holding this entire time. Moon.
Man, I wouldn't be surprised if we do get a massive short squeeze in alts. I still think that's possible. I didn't think it was possible yesterday. However, they held support, and we can look at some of them in a second. We can take a look at Sol too. But let's go to Bitcoin real quick. The thing really with that kind of concerns me about that little bounce that we're getting for maybe a wave 4, maybe a ABC corrective pattern on ETH. I mean, probably Bitcoin too, once we look at the chart. The thing is probably that's I'm still terrified of Tether. I've seen Justin Sun, some of his wallet accounts recently have been receiving pretty good amounts of Tether. And again, they're all about the same amount. I wouldn't be surprised that if the market does pump, it's probably because of Tether. And I wouldn't be surprised if the Tether market cap also increases ahead of that pump. So that's going to be something we're going to want to keep an eye on. Because again, I think that he's got to help out his friends, got to get out of there. CZ talks in a month. I think it's like February 21st. A lot of people have forgotten about that, but I think that's going to be critical, because what you'll have is probably Sam Bankman-Fried's word. And then guess what? CZ doesn't want to go to jail for 18 years. I think so. They threw that number in there to scare him a little bit. I think there's a good chance that he could start speaking a little bit. And we do know that the FBI is also working with Tether from some of those documents that we saw post Binance and around that same time. So we could start to see maybe some level of escalation in terms of cracking down on some of those fraudulent scams that Gary Gensler and Elizabeth Warren like to call crypto. I mean, even Jamie Dimon too, and Satoshi. He wasn't wrong about Satoshi though, right? Satoshi definitely minted some more Bitcoins. That's why the price is going down. It's not, but it's just one of the greatest quotes I've ever heard in terms of financial history. Incredible. It's amazing. The best thing is his ignorance to it too. It's like yeah, Satoshi. I'm like, thanks, Jim.
I mean, I think for him though, right? It's like he knows how much JP Morgan is doing with blockchain, right? Like they've got their whole Onyx thing. They just formed a partnership with Avalanche. For him, it's like he needs to say one thing to meet the legacy media narrative and have them toot the Jamie Dimon horn. But he knows deep down, he's like, what I say in public isn't going to detract the people internally, because we all know what we're doing. but let's go let all the people on Twitter get upset. Let's let the legacy media and the boomers have their laughs. Oh, Bitcoin's all magic internet money. Jamie Dimon saying it too. And it wins him the crowd that he needs right now. And if Onyx ever has public offerings, I would be shocked if all the people yelling about how much they hate Jamie Dimon right now wouldn't be like, "Ooh, Onyx, JP Morgan token." Right? It's like it's wherever the money goes, that's where the good narrative's going to follow.
I agree with you 100%. They're never going to tell you what you want to hear, but it's definitely enough to make sure that you get afraid when the market does start pulling back a little bit. It's like, oh fuck, Jamie Dimon was right. Eventually, he will be right, but he'll also be holding your bag because you'll sell at the perfect opportunity because you bought at the wrong opportunity. So it's going to be really interesting to see the narrative on that. But when I look at Bitcoin right here on the 4 hourly, I'm looking at this. I think, okay, wave 1, wave 2, we might be in a wave 3 right now. Interesting level for me is probably going to be around, I would say, maybe 36 to 37.8, 36 to 37.8. So about $1,800 range right down there. I think we could get one more candle going down there. Seems like it's lining up with the 4 hourly as well. But I do think that there is a bounce coming for Bitcoin. The problem is a lot of people are trying to buy the dip here, but I'm not, and for lack of a better word, they're idiotically buying via leverage and margin. They're not buying spot. So it makes it more easy for people like Grayscale and some of these other large participants in the market to just absolutely liquidate you. And, a lot of people are getting screwed over that way. That's why the price won't go up, I think, right now. So I think that's a lot of what's going on right now in the short term with Bitcoin's price. I do think that maybe there's one more dip down. I'm not convinced on the funding rates currently. I just looked at them. They're very boring. So I think it's heavy still. I think once we start seeing the funding rates extremely green, negative, people are shorting, that's when I think we're going to get that bounce. Where is that bounce going to land us? Well, I think it's going to be a three-wave move, on the obviously the 4 hour, even shorter time frames where we could see, A, B, C, maybe something a little bit higher too, maybe get rejected there, and then see something like that, put us around 44 to 45K. If we're unable to break that, which would be, finding resistance on this here, I think we go down, and I think we're going to get a massive 5-wave move down. And this is going to be our, wave 1. Here's our wave 2. Wave 3 is probably going to take us to, maybe down here around 33 to 30,000. Get a wave 4 bounce, and then maybe we end up a little bit lower, maybe 29, 28,000 for Bitcoin. It's going to be really interesting to see if that's the way it plays out, but it really depends on if we're able to reclaim, 40, 45 or so. Let's see. So that's what I'm thinking that we could see potentially on Bitcoin's price. Not sure if that's going to line up with what the market does, but I do think that might be one more little push to the downside. Jim Cramer might be right on the shorter time frame, but I think there is going to be a bounce fairly soon.
Yeah, I mean, I think you nailed it as far as spot versus leverage, right? Because that leverage doesn't take a huge movement to just completely wipe out everything there. Whereas, there's a lot of spot resistance all the way from like 40,200 to just under 45K. So like you can try and lever your way up to beat that, but it just takes one domino to fall for everyone to get liquidated. So I think, yeah, I mean, if we're going to see, a big sustained run up, it's going to be based off of spot movement, not futures. For it to be held, right? If we're just seeing great futures movement, funding rates like we did this last time aren't looking so hot. It's like, well, maybe we shouldn't buy as much leverage, and maybe we'll just make our bets in spot.
Absolutely. It's really dangerous here because everyone thinks that we're still in a bull market. Obviously, I'm more in the line that we're finally in our C wave. I think the ETF was the blow off top for that B wave correction. And again, this is spanning 3 years, this bear market. If we look at this in the corrective pattern, you can say 2023 was a bull market. That's fine. I understand that it moved up significantly, but the structure itself is still one of a corrective pattern. So it's going to be interesting to see how that holds. Everyone's going to try and buy the dips, but I think it's just giving Grayscale was selling at 49K. Let's put it that way. So if you give them Bitcoin at a higher price, then guess what? They certainly will do it all over again. They got plenty of reserves and supply to be dropping on the market. I pulled up Solana because we wanted to talk about it real quick. Interesting price action out of Solana, right? It went all the way down to roughly, what is that, $79, right around $79, $80. Bounced pretty good. I mean, it's up $6 from that. Now, I was worried that it would go lower than the wave one. Wave one being somewhere around here, around $68. We didn't get that. So I'm still somewhat under the impression that as long as we stay above that 68, there is a good chance that we could push up a little bit higher. We could have a stupid, dumb one-day alt rally that just shoots straight up, liquidates a lot of people out of the market, especially people that are shorting. The thing that scares me about this is probably going to be like and I remember the date because it was so traumatic, but July 14th, when that XRP, announcement that XRP is not a security, it's an asset or whatever. I don't even care. I'm so tired of that entire case. But besides, I also got hurt that day, so I'm just a little bit bitter about that. But the next day, everything came down significantly. It was a buy the rumor, sell the news event, or buy the news and sell everything 2 seconds later, pretty much event, liquidate everyone. So I think that there is still a question that we could see that. The question is, do we see this as Bitcoin and ETH pull back, and this is just a rotation of capital that pushes the price up? That's another thing we have to keep an eye on. I think that there isn't necessarily a lot of money coming in. If it is, it's retail or Tether. I say that because it's still very possible that we could see stable coins being printed and minted and shooting the prices up, but I don't necessarily see the inflows. I mean, I'm just going to pull up the volumes right now. Those are the volumes. Those are, don't get me wrong. The volumes were dead back here in, 2023 when we look at Solana. But let's go to the one day. It might be easier to see how the volumes are actually stacking up. But the volumes, more than anything, came in this rally here. Now they're starting to trail off. So I wouldn't be surprised if we get one spike to the upside, and then that finishes this ABC corrective pattern, this B wave. And then it's just downhill from there. So I'm really cautious right now around alts. It could go either way. Something bad could happen and they just sell them off. Something tells me that they're going to give you one last middle finger before this market finally decides to absolutely tank. That's just my opinion, the feeling I got in my gut right now.
Yeah, no, I could see it. I mean, I think Sol is probably going to trend a little bit differently than Bitcoin and ETH, just as it always has. But I think if we see that final continuation and play out of the Elliott waves on Bitcoin, I think Sol's going down with it, right? I think there are different cases, but right now, I mean, the main narrative that Solana people and community diehard Sol maxis are fighting for is that it's better than ETH. It's like, if the price of ETH is going down because all of crypto is going down, the price of Sol is going to go down as well. And then it's also like, we're not going to make this what should be the end of the episode, a 15-minute tailwind into the blockchain trilemma and why blockchains, perform and operate differently. But in short, yeah, I mean, I can see Sol getting another quick bounce. There's been a lot of hype and a lot of good narrative following it. But if everything else comes tumbling down, Sol's not going to be the one standing on a golden pillar.
Not at all. I completely agree. I think the crypto market is fucked, for lack of a better term. I genuinely do think that, right? So every time that TradFi comes into the market, offers a product where crypto is now considered TradFi, they're just offering you a derivative. Nothing good ever comes from it. You're just betting on the price of an asset doing something without owning the underlying asset. We know that a lot of people had exposure to crypto. They just wanted to get out of it. So many people got screwed over in FTX, got screwed over at Terra Luna, by the way, just filed for bankruptcy, Terra Labs. But I can't see.
I saw that. They filed for bankruptcy in Delaware. It's beautiful.
Yeah, fucking home of Joe Biden, Delaware. Actually, I don't even think it's his home. He's from Scranton, right? I don't know. He was a senator somewhere. I'm just talking off the.
Yeah, he was either Delaware or Rhode Island. I think he was Delaware. I think you're right there.
Yeah, I think he was the senator of Delaware, and then he was born in Scranton or something like that. He always tells us we should just listen to one of these days. But
yep, you're spot on. Born in Scranton, rep Delaware in the Senate.
Joey B. But I think this is where we kind of stand in the altcoin market. The alts are different right now than what Bitcoin and ETH are doing. However, I still think, and I completely agree with you, that anything could change where the narrative or just the price action of Bitcoin or something like that changes. Everything's just going to get dragged with it, right? if it is a rotation of capital, that's what's happening, and that's why the price is up. But if it's not, then it's just a mad dash for liquidity. So it's one or the other, and we're going to find out sooner or later. I still think that we are going to see a pretty good correction come February once we get this bounce, and I think that we could be seeing going into the halving, in April. Maybe that's the 40% that we're at. That's the bottom of the fifth wave. Then we have to ask ourselves, okay, if we do get a bounce, are we going to see another crash in the market? To be determined. All right. I have nothing else on the agenda. I know that Tesla's going to be reporting earnings in about 9 minutes. I don't necessarily want to be on here for that because I got to go use the restroom. Is there anything else that you could think of that we should talk about, or you good to wrap up today?
Nah, I think that's good to call it here. And we'll get you off into the bathroom sooner rather than later.
I got to piss like a racehorse. All right, guys. Thank you for being here. I just want to say thanks to Randy. You guys are always here. Appreciate you. Chris, always a pleasure to have you on here. We'll be back tomorrow. I think J-Web and I should be back for normal time. House, we got to get an episode where all three of us are on together. Hopefully something breaks soon, so it could just be like, damn, look at that. It's like watching the squid chart at some point. But that'll wrap it up for today. GDP tomorrow. Watch the Asian markets. Otherwise, take care, everyone. See you guys tomorrow.